Welcome to Market Matters. I'm Khoo Hsu Chuang and I'm joined by Wei Lynn, Tang and Charlotte Chong. Ladies, what an ugly day in the market again. It was like it was puking all over the floor, and then it puked some more, and then it puked some more, and then it puked some more. I mean, everybody's getting tired. I'm getting tired.
Chong, I think you're exaggerating quite a bit. But the market has been down for a few days now. I think today the FPM KSCI in the morning actually fell below 1,600 points. But I think this week we do have some heavy data coming out. China PMI figures tomorrow. I think the market is expecting some weak figures. And also Friday, the US non-farm payrolls data.
Yeah, some clarity, please, Charlotte.
Like what you say just now, I'm feeling very tired looking at the market for the past few weeks even. Because even though it has been going up and down, but we don't see a very solid catalyst pushing the data up. And ringgit deteriorated further after Bank Negara Governor Tan Sri Zati said the central bank was not facing any pressure to raise the interest rates. Now it's at 3.25% still. Ringgit dropped to its 17-year low, quoted at 4.47 against the greenback this morning. And
yeah, that's scary territory because the ringgit was actually pegged to the dollar at 4.81 in 2000 and in fact in 1998.
It's getting really, really worrying.
Yeah.
And FXCM, a global online broker, say there's no flaw to be seen when it comes to ringgit weakness, and there's even an increase of possibility for the ringgit to drop even further this week if the manufacturing PMI, like what Wei Lynn said just now, PMI from China comes lower than expected tomorrow. And investors are also very worried about the sharp slow growth in China. Shanghai Composite Index and CSI 100 Index each dropped about 2% today. And I don't know about you guys, I sense the fear in this region because US Federal Reserve is going to pull the trigger by the end of this year, like what Janet Yellen said.
Well, first Janet Yellen said no, they're not going to raise rates, and then they said last Thursday that they're going to raise rates this year. The thing is, tomorrow morning, being the end of the month, it's 11 billion ringgit of Malaysian government securities are going to come due. And whether or not foreign investors actually roll that number over or redeem that as they did in August last month, month, that's a big concern again on the downside for the ringgit.
45% of the 11 billion ringgit is actually from foreign investors, and it's likely for them to pull out the cash, and this actually push the country to one step further to a currency reserve crisis. Back to you guys.
Well, the one bright spot on the horizon was actually this morning on Al-Salam REIT. Now, that's the second IPO on the REIT side for the Johor group of companies. It's just the 9th listing in Malaysia this year. Quite a nice little premium. They ended up 5% on the day to 105. Quite a nice little company in terms of a safe haven for yield chasers, Wei Lynn?
Yeah, that's right. So Al-Salam REIT is actually owned by the state investment from Johor Corp. What would be selling is actually, of course, the yield, right? Annualized dividend yield of 6.41% for the financial 2016. So today it was listed, and Al-Salam REIT actually owns 31 properties, and part of it is actually the 28 KFC and Pizza Hut restaurants outlet nationwide.
Yeah, so this I think is the non-healthcare asset side on the REITs for Johor Corp, and they own some of those, you see, Pizza Hut outlets, KFC outlets, Komtar JBCC, so quite a lot of those assets are actually in Johor. Debuted at 1 ringgit, I think it traded as high as 116 on the day, closed up at 105.
Top actively traded stock.
Correct, yeah. Johor Corp still owns 56% in Al-Salam, but the rest of the market owns the rest. And if you're a yield chaser, 6.41% on the year is not bad.
That's right. So at today's listing ceremony, the CEO actually said that the REIT targets to acquire at least 3 new assets within the next 2 years. So currently the gearing is about 38%. So they do actually have about 12% limit to go for REITs because the guidelines is 50% and below. But I think analysts, they say that J Corp by itself is a strong backing in terms of shareholder because it's got a lot of assets. So J Corp can actually also inject its assets into the REIT itself.
Well, we saw on the J Corp website that there's at least a few hundred Pizza Hut and KFC outlets which can still be pumped into
actually 810 KFC outlets to be exact.
Fantastic.
Domestic and also abroad. Yeah.
Imagine over the course of the next 10-20 years, you've got several more hundred properties to be injected into the REIT. At least in the next 2 years, the Johor Corp, in fact, the Al-Salam REIT CEO said that they're going to buy 3 more assets within the next 2 years. So they've got a lot of headroom to borrow some more. And there's a lot of money in the bank, in the kitty, to double, to add at least another 2 or 3 assets by a couple of years.
That's right. So J Corp currently its asset value is about 900 million ringgit, but with them acquiring assets, having more assets in the portfolio, they aim to have about 2 billion in the next 2 to 3 years.
Okay, well, I guess it's all hunky-dory right now, but if there's any obstacles on the horizon for Al-Salam REIT, I guess it would be the spectre of rising interest rates and then, of course, competing on the yield front with any REIT business, right?
REITs, I think, in terms of rental rates, because you do with a set of properties, but in terms of the rental aversion rates, right? Whether are you able to garner to increase rental? And right
Correct.
now the property
Correct.
market is quite slow.
Yeah.
But
and in a couple of years' time, you might have a commercial property glut coming to Malaysia. And that's just not a Malaysia issue; it's a global issue, the Nazani issue. So to recap, 3 takeaways for the company Al-Salam REIT. They listed today amidst weaker capital market conditions. 9th IPO in the market today. 2nd IPO on the REIT side for Johor Corp. Number 2, strong backing by, of course, the major shareholder Johor Corp and the ecosystem associated with them. And the third and the final thing is that they plan to buy 3 more assets within the next 2 years.